Okay. Guess
Yeah,
there you can see my screen.
can you hear me?
Okay. Ujin, are you there? You can hear me?
Yes, we can hear you, sir.
We are also live on YouTube. So we will now this yes market how we start up on Friday. I think I call up this GPP cards. I call on GPP cards. And currently GPP is so looking at, I think we're okay. I call on buy limit. That was on Friday during the live session, and thank God this is the format. So the market is so aggressive. But with what I'm looking here, this is a daily, I use daily time frame analysis on this trade. So currently we are on, but the nearly hit my stop loss. But let's see what will happen if this trade will go and will give us, we hit stop loss, or will give us profits. So you can see here just about some pips. I don't know if you are still on those that took the trade. I don't know if you are still on or your top loss has been hit. So nevertheless, it's part of trading. So you expect trade, some will hit stop loss, some will hit the profit. And that is why our risk management is what we have control over. I always say it. You don't have control over the market. No matter how look a trade setup may look like, the only thing you have control upon is your risk. So you must not risk too much. You must able to risk whatever you have thought that you can lose in the market. So the problem some of us we have is that we risk too much. And before you know, when we are in drawdown, we begin to so we begin to have emotional imbalance whereby the next thing we close the trade. Just like what happened here. I think the pips for this is about 60 pips. Now we're targeting to lose 60 pips and targeting to make about 450 pips. If this trade eventually go our way, it's a 7 arrow setup. So if I'm risking 1% of my account on this trade, and if the trade go my way, I'm probably to make like 7% of the account. So what bring about this setup? Why do I enter this trade? Why do I call this trade? Because when you enter, you must know the reason whenever I call a trade. And that is why it's very difficult for me to follow signal. Because when you give me a signal, say, for example, maybe I did not share this market analysis, you did not share me with this market analysis, you just give me maybe on a group, you just type a buy, a click on. It's way for me to follow people's signals that send without the reason why they are sending this signal. Now, this is the signal, and this is the breakdown of the signal, why I am calling this. So let's assume that on a group, I just type buy limit, this. No, there's no chart to back it up. And that's why whenever I send what they call a trade on a group, you see that I do a screenshot of the chart and send it along with the details. So why do I even call for a buy on this GBP card? Now the reason is, when you look at it, this is well, let's zoom out the chart. You can see that this market has been an uptrend. We have very clear uptrend. Market has been breaking structure to the uptrend. So very clearly, what we see is that we are in an uptrend. So that is, the trend is in our favor. So, and this is what we have. We have this high, we have this low. This is the last low that caused a break of structure to this high. So now that we have a break of structure, then we expect a correction for us to join the uptrend, assuming that price will continue making an uptrend. I'm on a daily time frame, and I call this trade based on daily setup, not 4 hours. So now, when on my Fibo level, now I did not use 75% to enter this Fibo. Somebody asked that question, one of our live session last week. Now, how do I know that it's 71 or 75? But this one, I did not use it because, and I tell you the reason why I refuse to use this 71, 75 entry. If I use 71, 75 entry, my stop loss will be low here, and that would be very big stop loss. And by now, that would be a very big drawdown. So what did I do? What I did was, fine, even when if I use 75, 71 as entry, I am still in the buyer zones. After the 50%, this red line is the 50%, which is called the equilibrium line. Above it is called discounts. So you want to buy from discounts and you want to sell from a premium. So anytime I'm buying, I make sure I am in a discount, a seller territory, which is called the discount. Anytime I'm buying, I make sure that I am in a seller discount, which this seller discount premium, and this is buyer discount. So I refuse to use 75 because number one is that I don't like or love whenever I still have what I call an FUG, an imbalance. Know my entry. Whenever I see my 75 or 71 and I am seeing a fair value gap below it, I don't like using this 75 or 71 for entry, because imbalance is what? I know imbalance is a magnet that will magnetize price down. So that's one of the reasons why I don't use, sometimes I will not use 75. So on this trade, I refuse to use 75 or 71 because of below my 75, I have this imbalance. So that's okay. And the next thing is to use order block. My order block is this last bearish candle that caused this bullish movement. So this O is my order block. So if I want to use, initially, if I want to use the beginning of the order block, the trade will be like this format. So I'm using this higher time frame to enter the trade. This will be the entry, which is still and by now, by this bottom, I will have been out of this trade. That should have been about 116 pips. So what I now did that was to refine the entry, refine the entry. So since I know that, okay, this is my order block, yeah, going to 4 hours. So now I now look at something. You must watch very well where liquidity is. Wherever there's a liquidity void or liquidity, that price will go and punch that place. So the reason why I decided not to use this daily order block was because there's a gap here, which I mentioned it on Friday. I said this gap is a liquidity void. You can see between this last bullish candle and between this bearish candle in 4 hours, there's a gap. So price will come to do what? To liquidate this gap or to fill it up. So I defined my entry based on this above the gap. So I was expecting, even this draw that I gave me now, I did not expect it. I was expecting price to touch the gap and to give a rejection immediately. But sometimes price will not just go the way you plan it. So that's what caused my entry. Then all I did was to do, okay, to use some wisdom that if there's this gap, there's a tendency that they want to do what we call liquidity sweep, to sweep this low. And that's what happened here. One, you can see the low is on this my trend line, this great trend line. And you can see now what happened. They swept the low and the market now is rejecting. Let's see if this buying can continue, or maybe they want to sweep one more low. So if they decide to sweep one more low, then my stop loss will be hit. So in this case, if my stop loss is hit, I will not blame myself. I did not enter this trade blindly. It was a good setup, was a good entry, A+ entry trade, especially from a daily time frame. All my checklist are met. Number 1, I am in an uptrend. Number 2, a break of structure happened. Number 3, I took the trade from another block. So that is, I will not blame myself for hitting stop loss. In this case, if they eventually hit stop loss. So that I will count it one of lesson to learn. So and now, if in case they hit stop loss now, and this is what they happen, because I have viewed, if they hit stop loss, what's the next destination that DPP may go? For now, there's no other destination for me, because every imbalance, you can see we have a break of structure. They have come to already, so there's no imbalance or any other things to fill again. So this one has already been filled up. So this has been filled up. So now, again, here, so here, all the liquidity here, all liquidity that is here, it has been punched by here before the reverse. So what will happen here, which I'm looking at. So let's now go to 4 hours now, is that they may sweep liquidity and reverse it. They will just sweep liquidity because they know that stop losses are here. So they will sweep here and they reverse the trade back again. And you now see this GPP card bullish. So I will be watching what will happen here at the end of today. If they sweep liquidity and hit my stop loss, and I have a bullish close back here, bullish on daily, we have a bullish entry, bullish candle close back after they sweep all the low here. Then we will do a re-entry. We'll now go to maybe 1 hour and look for a change of character in 1 hour and buy back again. So I just say I should quickly break down on GPP card. So now, we'll now go to a fresh analysis for today. I have a lot to share, but before that, I'd like to bring my partner to quickly show us what he is looking at, all the setup that is watching this week. It's a day traders trader, an awesome trader. So for those of us that love to do day trading, so let him share what he's looking at, position that is the trader is looking like to trade for this week, so that we can participate in that trade. Then for the next 20 minutes, I will now come back. I will now do overall analysis for what I'm looking at for the week, how we can position ourselves. I will show us my running trades and the trade that I want to take for the week. So I don't know if Sito, please, let's welcome Sito, a great trader. I don't know if Sito is ready. Sito, are you ready for us?
Hello, good morning. Can you hear me?
Yes, I can hear you loud and clear.
Okay, thank you very much,
So
Mr.
I will
Val,
give
for having
you,
me.
let me make you a co-host so that I can share your screen. So please, guys, let's go to the chat box and give 222 to welcome Sito. Let's welcome Oya, please. Go to the chat box. I want to see 222 as we welcome Sito on board. Sito, you have the floor.
Okay. Thank you very much, everyone. It's a pleasure to be here. Thank you for having me, Mr. Val.
Oh, welcome.
So I was around for our last session, but I left because something came up. I couldn't stay till the end. So it's very good to be here. All right. So great traders, let's look at what we have to do for today. All right. I'll be sharing my screen. Okay, please, you can see my screen. Just send the message on the group.
It's coming up.
Okay. All right. Is it up?
It's up now.
Okay. Thank you. So, personally, I have, as you can see, my watch list. Let me take this up. My watch list. I just have AU. What is this? I just have AU. That's AUD USD, Euro USD, GBP USD, and gold. That's XA USD. So, last week I had some analysis and I have done the one I look forward to taking this week. So that's what I want to share with us. Okay. So Mr. Valentine and myself, we have very, very similar trading strategies. Okay. Very similar trading strategies. It's also like referred to the smart money concept. So when I'm trading, I look out for two things. Or let me just show you, let me just type the things I look out for, right? When I'm trading. So number one is what? The direction. Sorry about that. The direction. Okay, the direction. Okay, like when I come onto the market, what is it doing? What am I like looking at, and how can I capitalize? All right. After direction, I look for what I call my POI, point of interest. Okay, just making it as simple as possible. Okay, point of interest. When I get that, I wait now. I wait for price to find its way back to my point of interest. Now, when I get into my point of interest, what do I look for? I look for a confirmation. Okay. So now that is just the three things I look forward to when I'm on my chart. Okay. So let us first of all look at what I've had on AU. Then I can go back and review some of my past trades. Okay. So direction, right? Number one is direction. What are we looking at? This is our 4-hour time frame. Sometimes I can even start from my weekly time frame. Okay. Uh, okay. So you can see that market has been very bearish. I don't need all this information. This is like a lot of information on the weekly time frame. You just need the most recent information. So let me shift this. Okay. So direction, POI, and confirmation. All right. So we are on a weekly time frame. As you can see on weekly time frame, we have been falling aggressively. Price has just basically reacted to this what? To this fair value gap here. Can you see what I just drew? This fair value gap. Price just reacted to this fair value gap, and it has fallen back down. So that just tells us that okay, we are still in a very what? In a very bearish trend. So I can go now to my daily time frame. Okay. So my daily time frame, I had a series of POIs. In fact, let me go down to my 4 hours because I want to show us what I did there. Basically, I'm going from weekly time frame because I want to know the direction. I want to ensure that I am in line with the higher time frame trend. You don't just want to enter your chart and then you go on to 15 minutes time frame or 5 minute time frame and then look for entries. Now, you may find your setup, you may find what you want to work with on those time frames, right? But you end up hitting your stop loss or you end up not being on the rest of the market. Why? Because the higher time frame is saying something different. There are times where you can have something like this on the higher time frame. You can have something like this. Let's say you're on weekly time frame, or let's say daily. You have something like this on the daily time frame. Okay, something like on the daily time frame. Now, at this point where market is making its retracement, this retracement. Now, do you know that if you go to the let me say the 15 minutes time frame, you're going to see an uptrend. You understand? If we are in this point of the market now. Now I'm trying to illustrate the importance of going from higher time frame. It is I don't it cannot be overstated. Everybody has to go from higher time frame. We need to know what the higher time frame is doing. Why? Because the institutions that we follow, right? They trade on the higher time frames. They don't go to 1 minute and place trades. Now we can get a confirmation on 5 minutes, even down to 1 minute. But when you are trading, when you are getting your narrative, your bias, okay, your direction, you need to go from lower time frames so that you can what? You can trade alongside the big financial institutions. You don't want to be trading against those people because they're the ones that have the liquidity, and you know liquidity is what moves the market. Sorry, my health is not very good. Liquidity is what moves the market, and you want to trade alongside the direction of liquidity. Now, at this point in time, you know that you're going to be seeing something like an uptrend. If you want to zoom into this place on say 5 minutes, you see something like this. You'll be seeing an uptrend on 5 minute time frame. I'm very sure we know that. You'll be seeing an uptrend on 5 minute time frame. Now, you may want to enter, let me say there's another block here. You want to enter another block at this point in time. It's a good trade. It's a trade that ideally you would love to look at. All right. But you don't know that now on the daily time frame that you were on, price has found its way back to the premium regions, the regions to look for sales. Right. So we are at this point now. We are at this point now. And we want to now you are seeing this on the 15 minutes time frame, you are seeing this. But on the daily, you are seeing this. Now, if you enter any buy at this zone in the daily time frame, I guarantee you the trade is not going to go well. Why? Because the higher time frame narrative is going to kick in at that point in time. When you are we have our impulsive move and our corrective move. Our corrective move is our retracement. Our impulsive move is our main move. So now in this case now, our impulsive move is what? Is the bearish movement. That's the downside movement. While our corrective move is what? Is the 15 is the retracement. Okay. So this is the impulsive move. This is the corrective move. This move here, the corrective move. So you know that we just need to look for how to be on the right side. Look for how to be on the bearish movement. Okay, so that was just a brief introduction to why I have to always go from higher time frame. I'll break down all these trades here. I'll break down all these trades in few moments. But let me just look at what I have for the week. So I want to be in line with the trend, right? Good. So now this is my 4 hour time frame. Okay. I have some PO now. After direction is what? Is POIs, right? Now I want to look for POIs. There's some POIs now I can find on this 4 hour time frame. Example, this fair value gap here is very, very key. Now, we just heard Mr. Val talk about talk about premium and discount. Okay, so basically your premium zones are the zones where you want to look for sales. All right, while your discounted zones are the zones where you want to look for buy. So now in a sell scenario, in a downward market like what we have here, we want to be looking for what? Trading opportunities for the downside. Okay, so now we're looking for selling opportunities. Now let me draw attention to something. You see this whole move, right? This whole move, right? This whole move now. If price was still somewhere here, if price if price came up, please just stay with me. If price came to this level and then it started showing me intent here for buys, I would need a lot of confirmation. Like I would need about 2 confirmations before I enter that buy. Why? Because I don't want to be caught on the wrong side. But if I have a confirmation for buys in this region, right, I can look to enter some good buys here to target the premium zones before I now continue my sell to the downside. Are we together? But now, since I did not have anything for buys at that point in time, I have to stay away from the market. Why? Because you don't want to be counter trading. If you want to counter trade, you must counter trade with what? With experience and then with your skill. Do you understand? But now, since we have taken this major low, and you can see that price has closed well below this low that we had here. Now I can look for sales. Now I told us that this fair value gap here is something I'm looking for sales. I had something here on the lower time frame. Maybe if I go to 1 hour time frame, I'll show you. I had an order block kind of situation here. Okay, that I looked for sales. All right. Now I have this one as a POI. Now since price has gone far away from that point, I don't need to, wait all the way because before price dances and comes back to this place and drops, that will be a lot of time, and we need to trade. I need to, get involved. So I can now happily go down to 1 hour time frame. Okay. So now on 1 hour time frame, I have this POI here. You can see that this place broke with a fair value gap on 4 hour time frame. So I'll look for a possible trade around here. But then again, I would be safer if I look for that trade here. Why? Because this is some sort of equilibrium zone. An equilibrium zone is basically the midpoint between discounted and premium. So I want to look for trade in my premium. So I have this now. So since price has run away from that place very far, I'll leave that for now. Now the next point of interest I have is this guy. Why am I looking for this guy? Now you can see that we have what? We have a nice break of structure here. We have a very nice break of structure at this point. Sorry about that. We have a very nice break of structure at this point. Okay, we have the break of structure there. And price broke that zone with what? With impulse, with fair value gap. It left this whole fair value gap behind. Can you see this whole region, the fair value gap that price left behind? Now, what gave me further confirmation for this zone? It is what I refer to as inducement. I love having an inducement. So for people that don't know what an inducement is basically price trading to a point of interest. Let me just illustrate it. So we have something like this. Okay, we had this and then we have this. Let's say price has broken this place, right? Now at this point in time, let's say I wanted to take a buy from here. Okay, in as much as this is a nice zone to probably look for buys, if price does something like this is what I call inducement. This inducement is also called liquidity. This liquidity now means that a lot of people, pay attention, a lot of people will want to enter buy trades from here, right? When they want to enter these buy trades from here, people will place buy positions here. They want to continue higher from that point. But now, since you are a smart money trader, you're a smart trader, you know that this zone is a zone of liquidity. Now, you know that the big boys in the trading industry, they want this liquidity to move the market. Why? Because they trade with high amount of money. So if they want to put this money all at once in the market will crash. We're going to have big spikes to the upside or big spikes to the downside. So now when they have this liquidity build up here, people will put money here. People will want to trade from here. So what will they do? They will very smartly push price they'll give you this small reaction to that other block that you wanted to trade from, so that you enter that trade. Then when you enter that trade, they're going to sink price to this initial order block, and then they're going to continue the upside. Now that is why I love my inducement so much. A demand zone on its own is good for me, right? Especially if it has a fair value gap, it's very good for me. But now when I have inducement, it is even better. Do you understand? So now what do we have here? We have an inducement here. Even if I go down to 30 minutes time frame, you can see that price traded close to that zone. It traded here and traded here. It traded close to that zone, but it has not touched this zone. You're probably wondering where this my POI is coming from. Okay, let me explain. We have other blocks, we have fair value gaps, and then we have breaker block. A breaker block is basically a failed supply or demand, right? So now let's say in this my scenario, price comes and does something like this, breaks it impulsively. Now I will not just go and delete this my initial POI that I had here. Why? Because price can still come and trade into that place and continue. Now at that point, this place becomes a breaker block. A breaker block is that okay, that demand zone that I wanted to trade from has failed and is now going to work as what? As a supply zone. Are we together? When a supply zone fails, let's say we have something like this. We had a supply zone here, right? And the supply zone fails like this. Now I can now use this supply zone as a what? As a breaker to continue to the upside. All right. And that is basically why I have that. I have that drawing that I have here. This my drawing. Now what happened? This fair value gap region from here, from this zone here to this zone is very big, right? So I don't know where exactly I would love to look for the trade from. So I just basically went down to, let me say, 15 minutes. So this 15 minutes, yeah, exactly. Now can you see this nice candle on 15 minutes? This candle here, that was a very good order block for possible buys. Exactly. See what I said, ba? What did they do after this order? They came to this order block here, and then they give some rejection. People will definitely enter that trade, but personally I will not enter that trade because I don't have a very valid order, a very valid inducement. So they give you this little reaction here, and then they fail. So now what happens? Now I will not go and delete that demand zone that I drew in the past. I'll wait for it to see. Will price give me an inducement so that I can trade that place as what? As a breaker, as a supply breaker. So now what am I waiting for now? Well, in AUD USD, I'm just basically patiently waiting for price to come to this zone, take this inducement, and then touch this my breaker block stroke FVG and fall. I'll be happy to take trades from this zone, and then I'll target this place as my take profit. Are we together? So basically I can take a trade from here, and then I'll target here as my take profit. Right? So now, will I take that trade up from this zone? Most likely not. I want to see price do something like this. Maybe I can go down to 5 minutes or 3 minutes, and then I wait for what I call a market structure shift. I want price to shift in structure, something like this, a new break of structure, printing a new order block or something like that. Then I now enter from that area when I have my inducement, and then I can take the trade to the downside. Are we together? I believe we are. So that's what I'm looking at for. That's what I'm looking at for AUD USD. So now okay, I'll come down and break down my past trade, but let's see what I have for Euro USD. So basically, you know that these pairs kind of are correlated. But what I mean by that is that they kind of operate in the same way. Do you understand? So I have see the idea here. Just very briefly, let me explain the idea I just said now. So now I had a valid demand here. This is my 1 hour time frame on Euro USD. I had a valid demand here, and this demand failed with impulse. Price came here and gave me what? Inducement. It traded close to that place, but it did not touch that place. That is inducement. Okay. Price came and gave me this nice inducement, and then I still waited. Price came and touched it and fell. Now that would have been a nice sell trade. Now the same thing happened again. I had another breaker here. Price came here and fell. And then after falling, it still came and gave me this inducement here. And you can see that when price came and took this inducement at this point in time, price even it gave me another order block here that that I traded from. Now at this point, you can see that this is my confirmation here. Right? If you don't enter from here, this is a proper trade here. But if you don't enter from here, this is a confirmation to enter from here. And then you can see how price has absolutely fallen to the downside from these areas. Okay. Now, I'm looking for the same thing here. Now, where is it? Where is it? Where is it? What happened? Why did I take this? Let me see. Let me look. Let me look at what I had here. Uh, okay. So basically, I have this fair value gap here that I'm looking at for a possible rejection of that place. Now, if that one doesn't work, if that before price gets there, I have this one too. I have this one here. Can you see this one? Can you see this very nice area here? Price broke with impulse, and then it has printed a nice liquidity area for me, a nice inducement area here here for me. So if price dances its way to this place, I'll look for confirmation to sell. If it breaks, pay attention. If it breaks that zone, I'll expect it to come into this zone and fall. But for now, why am I talking about higher time frame? Let's go to our daily time frame and see something on daily time frame. You're wondering, where is this thing coming from? Just when you go back to your chart, you just have to look at this thing very well. You're going to see all these things and study. It's very nice. So I had why do I have this POI here? I said three things: direction, POI, and what, and confirmation, right? So I've told you the idea of how I look for all those things. Now you can see that I had this very nice supply area here, a very nice supply area here, right? But what did price do? Price broke that area with impulse. After breaking that area, it still printed some liquidity here for me. Are we together? So now I'm waiting for price to develop inside this area. Do you understand? Why am I waiting for that to happen? Because this is daily time frame. Daily time frame is very big. If I want to have an SL, it's going to be a very big SL. All right. So for now, I'm still going to be bearish. All right. I'm still going to be bearish until price starts printing what I call a market structure shift. What I want to see now, I want to see price do something like this and then start breaking structure to the upside. Do you understand? Then I can now start looking for my what's it called? My order block here. Wait for my inducement, and then I can enter and continue to the upside. All right. So that's what I'm looking out for Euro USD. Right now, I'm playing the patience game. Last week there were a lot of opportunities in the market, like I just showed you on the AU and EU. So now you see that when you have that kind of opportunity, it does not mean the next week will be like that. The next week can be a phase where the market wants to retrace and breathe a little bit, and then you can enter when it presents opportunities for you. Don't rush to enter trades. Last week had a lot of trades. Do you understand? But this week now, it might be a little bit slow at the beginning of this week, but I know that with time things will develop and we're going to have nice trades with time. So this is my GU. This is my GU. I'm also bearish on GU. Same thing, the same idea every day, Price break structure with impulse, then I have my inducement here, and then I fall. The same thing happens here again. Price has broken this place here with so much so much impulse, and then it has printed an inducement for me here. I'm going to look for price to come into these areas for sales, and then I'll take my trade. And then one more is gold. Okay, gold has been in an uptrend. What's wrong with that network? Okay, gold has been in an uptrend. So basically, I'm waiting for gold. See what I'm waiting for here. The same thing here. This is 1 hour time frame. You can see that we have this zone here that price has broken with intent, and then of course we have our inducement here. So I'm waiting for price to just come into this zone here and give me a very nice rejection, and then market structure shift, and then I will enter my trade. And then lastly, this one I just analyze this one. Okay, I think that's SL on BTC. Okay, not yet SL. Analyze this one just for the fun of it, just to see what it is. I'm not taking that trade. I'm not in that trade. I just analyze it. So Basically, this one is how do I explain this one? I don't know if we know Quasimodo entry. Quasimodo entry is basically something like this. We have price come here, break structure, come back again, and then still go up and break. So we have a break of structure, then we have this one, and then we have this one. So maybe subsequent times I'll I'll describe this one. I don't want to bombard us with so much information right now. So just take note of what I've told us for today. So right now, this is just about testing, a forward testing trade for me, trying to see if this strategy will work on BTC. So that's what I'm looking at for BTC. But I don't trade it, right? It's just something that I added to my watch list just for, you know, analysis, just for my own personal education. So I don't know, Mr. Val, do I have, let me say 5-10 minutes? Can I break down like yes my
And go
last
ahead,
week
go
trade?
ahead.
Oh, okay. Thank you very much. So let me just take a few minutes because I have
Hello,
I just had about
Sito.
yeah.
If you have any entry opportunity, you can just call it out, maybe pending
Okay,
order. So
yeah. Basically, I don't. I'm just working with my. This is what I'm working with for now. This is what I'm
okay.
looking at. So I'm waiting for price to go back to that place so that I can probably call the trade because I have to be patient to wait for it to play out so that I don't make wrong decisions, or at least let my decision play out with my rule so that I can happily enter the trade. All right. So let me briefly just show us something on AUD USD last week, very briefly before. Okay, this was not even last week. This particular one is like from the past. But I'm trying to show you that what I just explained to you now, it works very well like a charm. Okay, it works very well like a charm. So let's go from here. I'll just quickly do that so that I can leave the floor back to the host. All right. So let's see. Let's start from here. Let's just do a little bit of backtesting session and analyze past trades. So this is what do I have here? I had a nice area here where price it was broke with intent. All right. Now price did this. Now, what is let me give us a very valuable tip. What is my criteria for inducement? Now we have a, a, a demand zone. All right. Let's say we have a demand zone to trade from. Now I want inducements. Someone can see something like this and say that is inducement. For me, I don't count that as I don't count that as inducement for me. Are we together? That is not an inducement for me. So what do I want to see? What do I see that will say, okay, this one is a proper inducement? Now, my rule for inducement is that I want to see my inducements come down to at least 50% of something like this. Do you understand? So if you take your Fibonacci from the demand zone till this point here, to the point of that the retracement started from, I want my inducement to at least be around that region. Do you understand? Or even deeper, even deeper. Let me draw that again. Even deeper into the zone here, something like this. I'll be happy to take, sorry, even deeper, something like this. I'll be happy to trade from here. All right. That shows that, okay, that your initial demand zone is powerful. Okay. So now I want the institutions to print something close to my entry. I know that, okay, very good. I can now look to enter from here. Same thing with the supply. All right. I want to see price do come here and then give me inducements, and then I enter from here and target, the these kind of areas for my take profit. All right. So let's just quickly go over what we had. Okay. So what do I see here? The same thing I explained to us just now is what is forming here. Okay. Now, yeah, this one, of course, you saw how I drew. It has to break structure. You understand? It has to. Let me show you. It has to break structure. That's the second criteria. So if you have something like this, all right, and you have something like this, I'm sorry, I don't have any. You see this leg, right? I don't have any inducement in that leg. All right. What do I want to see is I want to see my inducement actually break structure. Let it break something. Either it breaks here or it breaks here or it breaks all the way to this place. That's what I want to see. Now, when my inducement does all of that, now it shows me that it is valid. So I can now mark it out and then wait for price to now trade into my demand zone, and then I can go ahead. So those are my two criteria for inducement. Okay, a valid demand, then your inducement must be 50, at least 50% of the distance between the demand and the point that the retracement started, and then you can now what was the second criteria again? Yeah, he has to break structure, and then I look to enter. So what happened here? I'll just stay on 1 hour time frame. All right. So we had this valid point of interest here, right? Sorry, if a swing low here, that price broke with intent. All right. After doing that, what did he do? He came back all the way. You can see what I just explained now. You see, it's dancing upward. I don't have any inducement at this point. Do you understand? What makes me say, what makes me know that I have an inducement now is this point. Can you see this point? Can you see that now? Price broke this guy. Do you understand? Price broke that guy. Now, if you now enter the trade at this point, your SL can be above this guy. Then you just target this area. What do you see there? See that you have a very nice trade, a very nice trade. Do you understand? Now let's look for more opportunities that happened. Okay. I'm just doing a very quick. You can see this one, Abi. We had this structure point here, very strong a swing point, right? That price violated. Now price violated that zone with what? With impulse. So you can see that there is impulse in this leg. And then if you go to higher time frame, I'm very sure that you're going to see a fair value gap on that area. Do you understand? Now, what did I say? Direction first, Abi, sells, then POI. My POI is what? Is what I'm explaining to you, how I find my POI. All right. So after getting this break of structure, very strong structure, I wait for what? My inducement. And you can see how price just very sweetly traded close to the POI, but it did not touch the POI, and then it fell. Then this place now becomes my inducement. Are we together? That place now becomes my inducement. So I wait for price to trade back into that inducement, into that POI rather. Now, if you have should I call it the trader's eye, you'll see that if I go down to 50, I don't want to take us to lower time frame because it will scatter. Trading view will take me to the future, and it will be hard for me to start looking all these places right now. So you see this zone now. You know that if you go to 15 minutes or 5 minutes for a confirmation, you'll see something like this in this place. This is what you see here, and you see that this aligns with what I told you. Price goes into another block. What does it now do? Market structure shift with a new inducement, and then this week here is now your new entry. Now you see that you can target let me say 3 hour, 4 hour, depending on what you're comfortable with. Do you understand? Now see, just look at how price fell all the way from there. You can even target this low like what I said. That would have been a lot of risk to reward ratio. Are we together? Then I had this guy. This one really show on the higher time frame. I don't want to scatter the structure that I am on right now, so that I've gone on to lower time frame. I'm going to show you that it actually works. Do you understand? And then do we have something else? Okay, then we have this guy. All these ones are trades. Then we have this guy, a structure point here and here. That price breaks with intent. And then we have what? We have our inducement here. So if you took this trade, you would have had a winner. But then again, in case you not take this trade, I'll not have a problem in not taking that trade. Why? Because price still came up to this point. Does not touch the POI, and it still falls down. That still means that this is what? A valid inducement. And then price goes into this point, and then it falls to the downside. And then do we have another trade on this one? Okay, yeah, that's basically what happened. Same thing here. You can see the impulsive move to the downside, and then we had an inducement here. Okay, we had an inducement here, and then you can enter here and look for that same thing I just showed you now. market structure shift, and then you can enter off the fair value gap that will be formed there, or the order block that will be formed there. That's the idea of my trade. Even the same thing that happened here. So basically, what I'm showing you that has happened in the past is the same thing that we're waiting for to happen in the future. So now when price makes its way back to this zone, I'll be happy to look for sales. If it doesn't work out, no problem. I'll wait for these areas. If that one still fails, I can still wait for here. So basically, if this my supply fails, I can have the idea that okay, maybe I can look for buys. I can start looking for buys. Do you understand? While I wait for this place to trigger. Why? Because that indicates that price currently is on discount, and discount you look for buys, while premium you look for sales. Don't worry. It may sound as if they are saying a lot of things, but I promise it to get easier. Okay. So let me see if I had anything on EU in the last week that I might want to share. Okay, yeah, I've already shared this one. Already shared this one. Already shared what happened here. All right, I already showed what happened here. So the same schematic, the same everything. Just have your model and just stick to it. Can you see? The same thing. Have your model and stick to it. What you do now is you go back to the chart. Just study this thing. Do you understand? Just let it marinate so that when you see it, then you just clicks in your brain. Ah, I know this. I know this. I know this. What's it called? I know this model, and then you can just look to follow what I said. So you can see that we had. Sorry. That is a break of this key level here, then price comes back up and gives us an inducement. So we wait for price to trade into our order block here, right? Our POI. And then what does price do? Price trades into our POI and gives us a new market structure shift. The same thing again. Then we can enter our trade from here. And then price just kept falling to the downside. All right, let me check GU. I mostly trade just this for, you know why? Because so many instruments come with their so many stories. I don't have strength to learn the stories of so many these things. Do you understand? So, but if you have the capacity of trading so many instruments, that's good. No problem. Some people just don't trade many instruments. Personally, I don't trade. I just trade this one. Some people trade only one instrument, only one. Some people trade two. Some people can trade everything on TradingView. That is all good. If just find what works for you. So the same thing happened here. You can see the same idea here. Are we together? So this is just a backtesting session to show us that I'm not just, speaking grammar. This is what happens every day in the market. And then we are going to keep delving into all these things. We're going to be, unraveling more and more and opening our mindset to more of this. The same thing. So you see that I'm waiting for this place now. Because now this is my investment. I'm waiting. I've been waiting since. I've been waiting since. So till that one happens now, I will say okay. But you see that while waiting for here, this one started forming. So what do? I come and look for my trade here. Exactly. You can see that my zones are working out very perfectly. Okay. So let's recap everything I said. I said what? Direction, POI, and confirmation. Direction, you can do that on daily time frame, weekly, 4 hours. I want to just know what the direction of the market is. You understand? Where is it going to? Where is it coming from? Where is it going to? So when you get your direction, you now start looking for POIs that align with that direction. How do you find your POI? Fair value gaps and other blocks. Fair value gaps and other blocks. Now, these fair value gaps and other blocks have to break structure with impulse. After breaking with impulse, leaving behind fair value gap, you now wait for what? The inducement. When you get the inducement, you wait for price to trade back into that your point of interest. And then in that point of interest, the last piece of the puzzle comes in, which is what? Confirmation. You just basically wait for a market structure shift, and then you enter off the new inducement or order block that is being formed. So I want to thank us all for staying around and, and listening to me ramble for the past how many minutes. So thank you very much, Mr. Val.
All right. Thank you. Thank you. That was great analysis. Okay. I will quickly answer to the questions. Our time is already spent, if you don't mind. So just the next 10 minutes will be done. So somebody asking if Mr. Austin has a YouTube page. Yes.
Okay.
Mr. Austin is my colleague at AGS Tech. So we have a YouTube page at AGS Tech where even as we are talking now, this live session is on YouTube. So we can send you chat me up. So I will send you the YouTube. You can follow us. So all these things on the YouTube page at AGS Tech. So that's for that. So we now quickly update. The next live session will be on Wednesday. Big reason is that we have training. So we are starting beginners class at AGS Tech tomorrow. So beginner class. So we have 3 days of beginner class, morning 11 a.m. to 12 and 7 p.m. to 8. So we have 3 beginner class where we teach. Then we have 3 days. Then we have 3 days live session. So our live session will be Monday, Wednesday, and Saturday. So I believe whatever we cover from today, you can see you through till tomorrow. Then before we come back on Wednesday, then we will see you through on Tuesday, or Thursday and Friday. Then on Saturday, we look at synthetic, because synthetic's live on Saturday. So we do synthetic, we call trades. So that is for that. So let me quickly, at least, Austin has done a well done for breakdown. So those of us that love day trading, we can just, I did with that, all the teachings. I can see what he did now is teachings. And that was awesome. That was powerful. So let me quickly share my screen, and just in the next 5 minutes, I think by 12:20 we should be done. So I don't want to keep us for a longer time. But so let me just share my own view, what I'm still on. And you know, my time of trading is, I'm a long-time trader, swing trader. So I trade from higher time frame mostly, and scan for days. I can hold my trades for weeks, for days, and that is my own style of trading. So that I'm a very busy person. I don't like looking at the charts every minute, every hours. So when I set a trade, it can take days to get to my entry, and when it's running, I will leave the trade. For example, like my Euro USD. So C2 have break down Euro USD. So I don't need to be breaking down where is my view. Here now, in the next 6 minutes, I will show us my view, overall view, where I'm looking at Euro USD to go. No, since last week I've been saying it, that Euro USD, GBP USD, don't buy. All you need to do is to look for opportunity to sell. So now is to give you overview of what the market, that currency pair, what is doing. So it's used to look for, okay, this is where I want to position myself. So I'm on this trade currently, and this was my entry before the NFP, and here. So now coming back to weekly overview, where will this trade likely to go on weekly view? So now, as Sisto has mentioned, we already highlighted it. Look at this place between this candle here and this candle. There's this big imbalance, which is liquidity. I tell you, at least price will come to the half of the liquidity, if not cover all. So there's still a long way for USD to go. And here is the other block that caused the break of structure. This is the other block here. And this is the other block that caused the break of, that caused this momentum. So I'm seeing GBP USD at least still coming to 0.99668. So that is my target, overall target for Euro USD. So, and that's why I'm holding my trade. If I can ride this guy to this destination. So now, how do we look for trade entry now? So weekly I've already said we are bearish. So all we need to do Weekly say we are bearish, daily say we are bearish. Now, when you look at daily, by the end of today, because I love tracking trade by daily. So we have this low, last low, that price closed behind. You try to push up to close above it, but what we see we have price trading below that support. So immediately price begin to trade below this support on daily closes basis. I know that no, we are in for a long sell. So here is another support area that we have currently. You can see this place, this support, price was rejected. Now, if by the end of today, which is 11 p.m. Nigeria time, we have a daily, if you have a daily candle close above this low, then the next destination support that price will likely come is 0.9968. So if we have a daily close, then which my target, this my target will be in view. But if we have a bullish close back above 1.02275, then the tendency that we may see a reversal or a bullish run on EURUSD is certain. So this daily candle close today will determine the next move, whether we are coming or we are going up. So then if we now have a bearish close today, then expect a pullback, maybe a pullback back, then before the next leg that will continue move. So is that pullback that you want to do what? You want to sell from. So now looking at so my trading is on 4 hours basis. So on 4 hours now, what are we looking at? We have this low. So this low now stands for what? A clear break of structure. Now we have this other block. This is the other block that break the structure. This other block, I will not look at all this, what happened here again. This is the other block, because the other block that breaks structure matter a lot. So we have just that block in our base structure. That is one. So, and I don't think, because of the momentum of this trade, that for now, if price will return back here, I don't think so. So looking at 2 hours, then we have another low here, which is this low that price has broken out. So, when we have there is a shallow reversal and there's a deep reversal. When price is in a strong momentum, that deep reversal is not common. All you'll be seeing is a shallow reversing, and price will not be going to go deeper. So that's where you now come to smaller time frame to look for entry. So now you can now come to your 1 hour, your 15 minutes, then I'm beginning to look for a change or a break of structure in 15 minutes so that you can get entry. So for me now, let's say I want to add to my entry. If I want to add to my position now, I will now come to start position. Now, I have taken a position from a higher time frame, which is riding. I'm currently in serious profit. But now, if I want to stack to my position, first and foremost, I will break even from my first entry. I will break even because I don't want to have too much exposure on my account. So I will break even. Then I will now come to 15 minutes. So if you come to 15 minutes now, just like what Austin has analyzed, you can see the reason why price may not come back to that 4 hours order block again. Because on 15 minutes, now we can see now that we are trading below. This place is support area. It's a resistance now. A support that broke it up, a resistance. So on 15 minutes now, what we now see now, we begin to have a break of structure on 15 minutes. I have this fair value gap, just like Cito has analyzed. We have this place now forming inducements. Now, then two things happening here. If you want to I'm breaking down USD in case you want to take note. We have another low here. So whatever that made price, if price come back here today, if you break this low, then this is the high will now begin to work with. We will no longer work with this high again. Because from this high now, from this high to this low, you can see price trip into premium, then and reverse. So if this price now, if you break close below, if you break this low, it becomes what? A break of another structure. I'm not expecting price because of the momentum of, because USD is so strong. NFP came out positive, and we are in a bullish run on DSY, plus the positivity of NFP is giving dollar very strong momentum. So if you have another break of structure now, this place will now become my high. Then I will now look for a pullback to around here and sell. But if this low is not taking, then there's tendency that then we can have price. Maybe as it is now, maybe it's going up. Here will now become inducement. Then we can have price coming to this other block here. You can see now that whether I'm trading for other block or I'm using my 75 or 71 is almost at premium, which close to this other block. So I cannot take my trade from here. Right? So I cannot take my trade. So you cannot take your trade from this. You can use this other block here. I'll do my sell limit. Me, I prefer to sell limit now. The reason is that I don't have time sitting on the system to wait for price to come to my POI and go to 5 minutes. I don't like 5-minute trading. Every 5 minutes, I begin to wait for another change of character. I don't have that time sitting on the system. So I will just set my sell limit, my stop loss come above here. So whatever that made this price not to go, when it come to this place and it come and take out this high, it means that it's not ready to sell. So this will be my entry. If price begin to reverse, so that will be an entry for us. So take note of this, please. You can do the same thing on your chart now. So this will be our entry. Maybe on Wednesday, I will break down the reason why I am using this 71 or 75 straight away. I'm not waiting for any other POI Kiniko. It has been tested, back tested, and it has between 40 to 60% win rate, which is okay. 2.5, 3 arrow. So it has been tested. So maybe on Wednesday, I will give us just a way of simplified trading. It is just simplified trading than if you are busy, maybe you are working, you don't have time to stay on the system like me and Sito, because this is our full-time job. So just set your this thing and leave it. So Wednesday, I will do more breakdown. What come about this 71 or 75 or Fibonacci retracement entry. So that is it. So on Euro USD, I've given a breakdown. This is what I'm looking out for to have for my position. So you don't wait for 4 hours to have your position, because the market, you will not get entry. If you are waiting for 4 hours, it means our entries, you have to come to this place. But I am not seeing this guy coming back here. He already close below, trading below this support and become a resistance. The next, you can see a shallow retracement and price begin to. So Euro USD, guys, we are selling, and my next target is at 0.99968. So that's my next target for Euro USD. So let's see as it go. Oh, our time has spent. Hope we don't mind. Then my USD card is still on. My USD card is still on a position. So, and I have 300 pips target on this guy. So I'm still on this trade. I'll come. So what I can do now is come to 15 minutes to add to my position. So I'll look for what? If I see a change of character, a break of structure in 15 minutes, then I will add to my position. So now I'm not seeing any positions to add yet. So this is what I was looking for to add to position. I need this high. I need this high to be taken. So on 15 minutes, if this high is taken, then this is where I will add to my position. So for now, USD card is running. I have no medium of adding to a position yet. So whatever price is doing now, I'm not scared of any pullback. I'm not scared. There's still even price are not even taking this liquidity. So there's a bunch of liquidity that is setting in this double top. So I'm holding, and I called this one for live session last week, and you are still holding. You can still hold your board. What I did now is that I break even. Look at it, what happened last week. When NFP came out, it seemed as if it was just shakara, as if it's coming down. So, as I've said, fundamental will come, we shake the market as if, but the market will still return back to technical, the direction that it is going. I've said it. So fundamental will come. It will do an initial graph for 30 minutes, 1 hour. But if you are on the direction where the big boys are pushing market, price will always go back to that direction. So just what happened here on NFP, then we see price move up. So there's no more setup. GU, we are still bearing on GU, please. Don't buy GU for now. There's nothing that is saying you should buy GBP USD for now until you see a clear. So this my target is already, price is coming to my target on GU. Though I'm not on this trade, I think I out from here. So, but this is where I'm looking at. From here, we may see a bounce. And whatever that may price, hey guys, whatever that may price close below 1.21216, 1.2083, which is, we have a daily close or weekly close below here. See something, let me show you something. Open your eyes. Look at this here. Look at this imbalance here. Look at this. So, look at this. There's an imbalance here. Then, under the imbalance, look at this other block. So, look at this other block here. So, whatever that may price, you can see the reason why you should not buy for now. But that may a weekly candle close or a daily candle close below here. Then, price will come to this imbalance or get it to this other block. So, for this reason, there's nothing telling us to do what? To buy GBP USD for now. Dollar is stupidly bullish. So we just look at opportunity to buy, to sell at any pullback. Right? This is where I sold. You can see I sold here and I exit here. And look at what market has done afterward. So we can see now, after we break structure here, we should have seen a pullback. Now, after we break structure here, then the next thing will give us another pullback to sell. But because we are in a serious momentum, bearish momentum, all we are having is a shallow retracement, and price is the same. It's going down. So now, for now, there's no trade on GU. There's no trade on GU, so we let GU to go. The last one I want to talk about is gold. Me, I prefer trading gold for my higher time frame now than I've traded gold. But anytime I try to trade gold on smaller time frame, the thing they used to hit me raw. Last week, I bought from here and I made my target was that gave me about 500 pips last week. So now Now we have price trading up. So this is our low now. So I'm giving you overall that you cannot go to your smaller time frame and do what? And look for a sell and begin to do whatever you know to do. But my duty is to give you the bigger picture, what we may see on gold or another currency. So gold, you can see now price broke out from this daily trend. It closed about, it was on Friday though, that daily close is not that, it's a shallow daily close, but for price to close above this dark place, so the next target, which is this resistance, which is 2,715. So whatever this is doing now, I know some people are already selling. Good for you. You thank God you are making money. But I'm not going to sell. I wait for what? A pullback and buy. So I want to buy, and I will be using my 4 hours to buy now. So here will become my low. I have a break of structure already. So this is the this is now we are not trading between this low and this high. So simply what I will do, I just to bring my Fibo and wait for price to come to premium. I tell you, I will set this, but it's a big, so this should be my trade. So I wait patiently, like so. That will be what? About 200 and, okay. Okay, let me use 75. Let me use 75 entry. So that would be about 200 pips stop loss. So 200 pips stop loss. If I use 0.01 on my $100 account, I am risky. If this trade hits my stop loss, I will lose $20. I repeat again, if I'm using 75, it will give me 200 pips, 200 risk. If you use 0.5, you give 20 minus $20. And if you come to your target, so that is 600 pips, that will give you about $60. So you are risking $20 to make $60 on your account. This is possible. It has worked and it's only work. So this is how I will be watching gold in this format. I'm watching gold in this format to see how we can get entry and continue bullish. For those that want to sell, all you need to do is to do what? Let me remove this. Maybe you come to 15 minutes. Come to 15 minutes. So we already see where we are looking at, where we are going. So on 15 minutes, let's analyze 15 minutes. So correct. On 15 minutes, let me delete all this. I don't need them again. Let me delete the trend line. So on 15 minutes, so now we have, because somebody asked that, why don't you sell when you know before you get to your POI? So we have break of structure on 15 minutes. So now we have this. So let's use this as our order block. So we'll be looking at the price. If you want to say I'm not selling, no. So price coming to this place, then you cannot look for a sell entry from that place. So if that you want to sell, so this is what you should be looking at. Don't jump, enter the sell now. So you can sell. See, let me give you a quick overview that if you sell, you will make money. Because look at this. Look at this long week. Look at this long week. Price will feed this week at least 50% of the week. So if anything that give you a pullback to this order block, look for a sell. Your target, you can do something like this. Maybe you sell from, let's say, the bottom of the order block. You target the 15-minute half of the week. Then your stop loss is above. Let's give like 40 pip stop loss. So that will give us 3-arrow trade. So like this, already this place has become an inducement already. This high here is an inducement already. So wait for price to trigger this inducement, tap you in, and you sell. So if you want to sell gold, this is what you should look like. So that's for those that want to sell gold. But for me, I am not selling. I will just wait for my higher time frame opportunity. So guys, we have overextended our time. Do anybody have any question?
Yes, I have questions, sir. Hello, sir.
Okay.
Good afternoon.
Good afternoon, sir.
Yeah, it's about on this gold you are analyzing now. For instance, now this rejection candle on this 15-minute time frame now that is closing. What of if price break it out now? That inducement now, can we take it as a supply zone for us?
Can you come again, please?
Like this 15 minutes flow now. Price have already taken this rejection candle here now.
Okay.
Does it mean that the inducement here now is not still valid or is still valid as a supply zone?
This inducement
Yes.
is still valid now. That's why I said wait for price. Number one, wait for price to do correction. So if price is doing correction, this one will become inducement for price. The other block, the other block has not been mitigated. This last bearish candle here is the other block.
Yes. Okay.
Because the price have not get to the other block.
Okay.
So now as price, I don't know the price because if you come back or if it's coming back, then this will become inducement and price will tap into the other block. Then before we sell it back.
Okay, sir.
Now, don't say because this is selling now, please. Don't jump. Don't enter a moving train. It's dangerous. Always wait for a pullback.
Okay. Sorry, sir. Secondly, this about Fibonacci retracement, I don't know how to calculate my own, so I want to know how to use it. That Fib retracement.
Our times are overspent. On Wednesday, I'm going to do more breakdown on that Fibo, please. Let's make it on Wednesday because of we already spent over 40 minutes over our time.
Okay. Thank you, sir. That's great.
All right. Any other question again from anybody? So if there's no other question, we meet on Wednesday. Then, as we say, our training at AGS Tech, me and Sito, we work together as AGS Tech. So AGS Tech is a fintech company. Oh, yeah, okay. Your question.
Yeah, I don't have question much. Actually, I really want to know when the new section will be coming in so that I'll be able to attend the class. Because there are some questions, if I begin to ask now, it doesn't make sense. So it's better for me to attend the class.
The new what, sir?
You said you want to start the new section concerning the class.
Beginner class, so beginner
yes,
for those people.
I understand. There are some class that I skipped that I'm actually having problem concerning what I'm saying now. So I would like to be part of the class. I want to know the timetable.
The timetable, we are starting tomorrow 11, but that class, I think where we teach more, where we break down more, this thing is the intermediate class. So yes, tomorrow the one that we are starting the next 2 weeks, just a beginner class. Though we'll talk about support and resistance, just beginners. But by the time we move to intermediate class, maybe after the beginners, that's why we talk about market structure properly. So I think that's what you need.
Yeah, exactly, sir. Exactly.
Yes.
Thank
so
you, sir.
Anyway, if you are here in the AGS Tech, we have free trainings, but it's not free. We have beginner class, we have intermediate class, we have advanced class. We have not even go to the advanced class. Advanced class is a premium class, which the management will talk about later. But the beginner class is totally free. Please, if you have anybody that want to learn, refer them to us. It's free. We are not charging. Why the intermediate class?
Hello,
sorry.
Is it
anyone to join? Excuse me, please. For anyone to participate in our intermediate class, all we require is you will open an account with our recommended broker. Then you fund at least whether between $50. It's your money. Then you can participate in the intermediate class and access to all the record of the class. So that is it. So we are not charging anybody for money for training.
Thank you,
So
sir.
who is talking? Sponsor is talking. Sponsor wants to ask a question.
Yeah. So what I'm saying is that the physical class, where are you located? Because I have someone that I want to refer to you.
Yes. Our office is at Lagos, GRA, Isaac John Way, Landmark House. But currently, the physical class is still pending. So we are still doing online class. We are working on a robust to have a robust physical class. So when that one commences, I will let the community to know. Even not only physical class, we are even a trading room that will be doing live trading room as we are doing it online. So all those things, we are working on it. So that is it. So for now, it's still online. Bring that to online.
Okay. Okay. Thank you.
All right. So please, you can also follow us on our YouTube page.
That's what I want to ask concerning the channel on YouTube.
We'll post it on all the community, various community, so that you can subscribe to it. And I also have my own personal YouTube page, which I do a lot of things. So anyone,
what about your personal YouTube page? I've subscribed to that of AGS.
I think that one I will post. I'll also post that one, but anyone, but major one is for this session, for these training sessions and live session now, all this session we are doing now, it will be in AGS Tech. So we want everybody to come and follow AGS Tech. It's loaded, educational content and everything. So that is it. So thank you for tuning today. Please trade safe and be guided. Don't overtrade, don't over leverage.
Okay.
Thank you. See you on Wednesday. And for those that will be in beginner class, see you tomorrow. So if you have anything, you can chat me off at any time. I will respond to you.
Hello, sir.
All right.
What time is the beginner class tomorrow?
The first session is 11. 11. Don't worry. The link will be up on the group.
Okay.
Yes.
Thank you, sir.
All right. Thank you. Bye, everyone. Have a lovely day ahead.